Hello dear traders, Petar.jacimovic here. I want to do the update on the market right now, since I want to update on my positions on the short-term positioning, and also inform you about the traps and how market maker operates together with professionals, that you can have a better picture of what I'm speaking for many days and actually years in the past, basically on which approach they operate, and and how they literally they can eat you if you don't have enough experience, and proper knowledge actually to understand their businesses. It's very important to understand their businesses and how they operate. Now, I want to back here, and you already know that I'm holding my position on 112.75. I'm basically still in position from 112.75, and you can see how the price basically went into the upward move for the whole week, and now the price will eat all of these orders, bullish orders, which actually the weak buyers got in recent days. And actually the whole week, if you check these separations here, basically are representing the 1 day. So between these two white lines, they represent 1 day range. So basically you see the 1, 2, 3, 4. So the whole day, the whole week, pardon, the price is going upward, and now they will eat literally all these weak buyers which started to buy on the short-term swing trading and so on. Even these buyers who went into the breakout of this yesterday high and so on, and thought this will continue higher. Now, as I said, I will back on this and explain you more about and how you can actually hit their traps in many different ways. This is I will speak about my current position. This right now looks very, very good. I'm riding right now 120 pips plus, and everything happened this is about 30 minutes, and we already trading 140 pips lower. Now, you will say this is because of some news actually came in and some on, and you probably will see in the media that they need to cover this they need to tell you the reasons, in their opinion. They need to write, they're paid to write, but actually the reality is that this is already predefined in positions in professional traders, and they're pretty much as like me. We basically sit already, and we just have a patience to wait enough and to wait these market maker maneuvers, basically to clean the crowd. Even that you potentially thought that USD can go lower, when you see the price is going upward from consecutive 4 or 5 days, you're already starting to maybe close your position, change your opinion, and start to think that maybe you should buy, maybe you should close your position. You already got concerns about. But professionals, what is the difference between professionals and the crowd is in the level of the knowledge. That's the first place. So the level of understanding the market, who are the largest groups in the market. And the second thing is the psychological factor, very, very strong psychological factor that professionals got. And I learned that for myself a few years ago, and from that point I basically became a professional trader. So you need to understand, and you need to understand the reasons behind your entry, and then never never let it to be interrupted by any other factor. You must believe in yourself, in your knowledge. So the first place is you need to have a quality of knowledge, and then to trust your knowledge, and and the results will come, and they are coming. And as I said, I started my success basically since I realized what's actually important in this business, what is not important. There is a 95% of things which are not important, and 5 which are really critical in understanding of the businesses, in the different participants, the biggest players, and how they operate. Now, I want to go through how they basically trap you in many ways, basically how they can trap you. So the first thing first, I will start. This is for example 15. So if you're an intraday trader and you actually think that you got because you saw in the past bearish trend, now you want to naturally start to sell. And any time you think it's a good to sell, for example, you see, for example, here matching highs basically, and you start to sell here, they will eat your stop loss just above. So even you got a pretty fine downward trend, as you said, and if you're an intraday trader, you will think, okay, this is a good place to sell. Maybe I can sell from that point. We got testing that previous high, you know. You start to sell from that point. What's happening? You place stop loss just above, and what's happening after that? Market makers clean your orders very cleanly, and they make sure that they clean most of the orders. So that's their business. Now, you say, okay, price went higher. I want to again sell because my mindset tells me this is still bearish trend, and you see that there is a matching highs again. Now, what you say is, okay, maybe I could sell here. And even if you sell there, you again got cleaned out, you know. The second thing is, let's say you're a breakout trader. You start to buy this point here, but they make sure they did not give you any decent amount of profit, and then they clean you as well because you probably place a stop loss below these swing lows. Even if you're a breakout trader, you buy here, you got very easily clean in the few hours, 75 pip drop. Now you think, okay, that's it. Probably this will be the drop, you know, since I got this breakout, for example, of upward trend line. And you say, okay, now makes sense. They clean that. Maybe they want right now to go lower. But no. What they did is they want to take you as much they can before the professionals reestablish their predefined positions. Now, market makers' business is to do this. Okay? Market maker business is to trap you in different ways. And on that way they take their part of profit. Now, as you see, the market cleaned these sellers because the sellers tossed good amount of momentum lower, and you think now it's good time to sell. They clean you, but from the other side they clean more and clean more because what they're doing is basically, watch this. And what you got here is again there is a breakout of highs, but again they try to clean you. Today, what we got, if you're an intraday trader, you again think, okay, maybe this is a good right now time to sell, you know, because you again, you know, we got some cluster there, you know, and price actually guess it's a good for selling. But guess what? Easily 60 pips, and they clean you because you put stop loss just above the swings. Now, and you need to do something. You cannot put some very large, stop loss order if you're an intraday trader. So you have, you need to put this, let's call tight stop losses, you know. So there is a lot of mechanics how you can read this and how you can anticipate if you're an intraday trader. But for perspective of a position trader, which I'm myself, I'm a main position trader, I'm just holding and I'm sitting back and just watching day by day how they trap the crowd, and I'm still holding my short position on Japanese yen from 112 to 112.75, right? And now when there is a big drop of 140 pips, most of these buyers who, even if you're even swing trader and you start to establish your buying positions in this point, and you think, okay, I can establish buying positions, this we potentially change the trend. Now they clean your orders, and they will try to clean you as much they can. And this is the first wave of the selling block orders by professionals. So they use the area around 112.90, around 113 to actually start to distribute their positions, to redistribute their positions. This is a form of redistribution. But the point is, you must know what are their positions, right? That's the question. And this is where I teach you how to recognize the money flow rotation between the different markets, because different markets implement on exchange rate, and you need to find these pieces of the puzzle and understand these largest groups, how they operate, and basically to ride with them and try to understand their businesses, and then try to ride with them. Right? If you don't understand their businesses from the larger from these two major larger groups, which are basically the commercials and the large speculators, even the crowd, sometimes it's very good to understand how the crowd behave. That can be one of the good clues. Now, this is just one part. The second part is understand that the other types of intermarket colorations which may indicate the potential boost in some currency, which can be a hot in the next period. This is a part of professional trader. It doesn't matter if you're intraday trader, short-term trader, let's say swing-term trader or long-term trader, you need to understand the businesses. If you're intraday trader, you need to understand the businesses of the intraday operators, of the market makers, which are the biggest enemy for intraday traders, basically. Right? So this is just only, I want in this example to show you how they trap you. They can do this many times before they, the professionals start their major position and adding on their major already positions, right? So, you know, be very careful. You need to have, you may be wondering, yeah, but why that happened? You know, why we saw right now this drop? Because they don't care when they reestablish their positions, right? They don't use this just because you see some of the news. They will use on the some unimportant time, maybe on the lunchtime they can redistribute. Maybe they can do later in the day, as we see right now. Just you see, it's here it's 5:30 p.m. Central Europe time, and what they did, you know, probably no one expecting this at this time to happen, but they don't care. So the professionals don't care when they will do when they think it's the best time. So that's one thing about how they trap you. And as I said, I teach in my mentorship program and on digital courses, which I will start with my partner from next year, how to avoid that and how to write with these large players and how to actually read their businesses, understand their businesses. They have the patterns in their businesses that they're doing over and over. You just need to recognize that, implement that, and understand that, and find the good opportunities between these largest groups. The interesting point here I want to say, this is okay. This is the FX chart in the 15 minutes. Now, if I back to the weekly time frame, daily, pardon. Now, take a look here that you have a broken rising wedge. I spoke many days ago. Actually, from the starting, I spoke from this point. I started to speak about the broken rising wedge. We are in the sideways range. There is a space to price to retest the low 180 or 107.50. I speak this for many days. Now, look, the price exactly matched 21 and 50 simple wedge on daily time frame, and we started rejection. Coincidence or not, you know, that is like it is, you know. And price basically, that was a clean resistance for these mid-term traders or short-term traders. One of the things technically they saw also some good percentage of the already rally in the place, maybe outside of some Fibonacci numbers as well. This is a 61, 8 Fibonacci there as well. So everything in alignment there as well technically, which actually made it perfect, maybe timing for them to basically start their redistribution exactly at that point. Now I want to back on the future chart and tell you this is how you easily can see. This is a 15-minute chart, future 6J. And what we can see here, crowd locked here in this range. Price started down. Seller started to, this is again the inverse coloration. If you compare with US Japanese yen, this is a Japanese versus USD. So watch this like an index. So if you see the downward price on this futures, this means that weak Japanese yen. If you see it increasing, it means that strength in the Japanese yen currency for itself. And now what happened? You see that the range here, they started to going lower, and classic, you know, cleaning the crowd. Because traders was locked here very good amount of time during the whole Asia session and so on. And look what happened. They clean you. Now, this is a climatic action due to the very extreme reading in the volume, 26K contract traded. And you should expect some retracement before further strength on the Japanese yen. But don't get me wrong, this is a climax, but it's not a topping action in my activity since it's confirmed basically the trap for these locked traders and confirm that we went into this bar out of this let's say log base, right? So price may retrace some 38 to 61.10, and then you can see another cluster of positions basically. Even I can go to the 1 second chart. It's a very fast, so 1 second chart. This is a 1 second chart. And you can see also here, so you can watch 1 second chart as well and see what's going on. For example, interesting point, there is a demand in the 1 second in this bar. So very good demand actually came in, which means there is a still, for example, this is a like tick reading, reading the tape basically. And that's how I'm doing. So reading the tick, so every second is one tick basically. You see, for example, 676 contracts trade in the 1 second bar. So there is a lot of demand still on the Japanese yen, and that can actually force this for them to go further higher. Now, I want to back into the chart. So this is about your Japanese yen. I absolutely expect, I'm holding my positions from 112.75. I'm expecting retest of 110.87, and then potentially maybe small rally from that point, maybe also clean breakout, we'll see, and then to go in the further in the next weeks to see potential retest of 108.20 or 107.50 in the next period. So be very careful if you try to buy anything on the short medium perspective and position trading. So my advice, watch for selling opportunities on this. I'm already bearish again from 112.75 and plus 100 pips at the moment. Now back on the euro, this is my second position. The bully I started to buy basically my major. I have a major position on the euro, and that position is from 1.1833. I will just mark this. That is my major position when I started to buy. So we'll mark that level where I started to buy basically. I will go just here and mark U33 level. This is where I started my position. Okay, and I will hold that position, and I will try to make 300 or 400 pips in the next period on this currency pair. I also found that here the large speculators are in control, and absolutely the trend is bullish in many aspects in the price section, in the watching the moving average, and there is also upward trend line, which I spoke as well yesterday. So very, very good. So I have a position riding almost 100 pips plus on the euro dollar, and position around 100 plus again on the Japanese yen. Okay, and it's a very good progress, both currency pairs, and I really expect, don't get me wrong, I'm very confident in my trading and my expectation. I'm very realistic. First of all, to start on, I got a position basically. I was one of the sellers who started to sell and tried to sell at this point, but once I see them wrong, I redraw my charts. I did again rework of fundamentals and current sentiment, and then I changed I shifted basically from bearish to bullish and started to be absolutely a strong buyer on the euro versus US dollar. So you won't be always right, but the point is to understand, and immediately once you see that you're wrong, you need to do a rework of your sentiment on the fundamental aspect, intermarket analysis, and also on the technical aspect. Technical aspect is basically also very important. So fundamental aspect is basically the mean of my entry, always. I never enter position based on technical analysis. I always enter position based on fundamentals, sentiment, current sentiment of the market, and intermarket coloration. Now, I only do the timing and follow the price on the technical analysis, watching many aspects and watching also to see basically the money flow on the futures as well and so on, you know. But I never base trade on just because, for example, I saw the breakout of the bullish flag or some pattern or price went above or below some moving average. That's a terrible way. It's a way to lose the money. Now, so that's what we want to, you know, you must understand that the price is not going higher or lower because that you got some indicator there or there is a breakout of something or no. That is just in the professional trading, it's just for timing purpose, for example, for profit taking purpose, watching the price action, the technical analysis. Sometimes it can be for stop loss, but I use a more advanced analysis for stop loss, which based on distribution process and so on. And, you know, so as I said, this is the serious business. The biggest minds are involved here. And if you don't have proper knowledge and you not have proper experience and proper mentor, you will be like a food for, let's call them big boys. I don't like to call big boys, but if that term is good to explain you, then we can call that. I call them these two largest groups, which are basically have influence on the exchange rate. If you don't understand them, their businesses, you have very small chances to make success. So I hope you enjoyed in this video analysis. I hope really that you enjoyed, and we'll see in the next incoming weeks, in incoming days. We have some high impact events. I think 4 December 4 is, I think, ADP employment change. These are just numbers which are basically created to trap the crowd and make crowd nervous and so on, you know. So again, real professional traders are already predefined. They're already sitting in their position. They just add ads when they see that good percentage of retracement and so on, you know. They already have predefined pretty much opinion, not just in the next week or so, they have in next even quarter. They pretty much understand what the incoming events are, what the political situation is, even fundamental aspect, intermarket analysis and everything, right? All I can say is, if you want to see how they operate and their businesses and how to ride with them and understand their businesses and not going into the noise, which are 90% of the market is about the noise. 90% of the things on internet are basically just there. You know, they just want to basically scam you and don't tell you the real truth because they don't even know for them the real truth. That's a very important. So you need to know which informations are vital in the trading and which are totally nonsense and unimportant, right? Now, what I can call you to join my mentorship program. It's a private one-on-one mentoring where I cover every aspect from the basics to advanced, from technical from basics to advanced, watching and then intermarket analysis advanced and then money management as well. Everything in the one, let's call masterclass. Again, you can contact me on Skype and we can speak about that. From the next year, I start business with my trading partner, and you will be able also to download the digital courses on the different subjects, right? And you will also have we'll also have some TV part, which you can watch daily or view on the market and our suggestions. Okay, hope you enjoyed. Have a good weekend. I hope you are doing good and your trading is doing well. Again, one risk warning: never risk more than you can afford to lose. Be controlled in your risk. Don't be greedy. Have the patience. Take the right knowledge. Work on yourself, and the results will come. That's absolutely sure thing. And have a good weekend. Bye bye, and speak to you next week.